A 30% market drop early in retirement isn't just a paper loss. It's money you may never get back because you're drawing income while your investments are down. And let's be honest, those drops don't always come from market fundamentals. Sometimes it's tariffs, policy shifts, or straight up political volatility that sends things tumbling. Ain't nobody got time for that, especially not when your retirement income is online. Hi, I'm Chris Hensley with Houston First Financial Group, and welcome back to Retirement in a Recession. This is episode 3 in our 8-part video series where we're giving pre retirees and current retirees the tools to make smart financial decisions in a very real, very uncertain economy. In episode 1, I talked about where we are in the economic cycle and why I believe that we're already in the early stages of a recession. In episode 2, I introduced sequence of return risk, one of the biggest dangers facing retirees, especially when the market turns south. And today, we're going to dig into one of the most widely taught and widely misunderstood investment strategies, buy and hold. Let me be clear right up front before anybody starts pulling out pitchforks on me. Buy and hold works, right? It's a powerful, time tested philosophy. It's the foundation of modern portfolio theory, and it's part of what's taught through FINRA licensing and embedded in most advisor training. It teaches us the importance of diversification, asset allocation, risk tolerance, and sticking with your strategy through short term ups and downs. And for the long term investor who's still accumulating wealth, it's often a smart, disciplined way to grow. But here's the catch: what got you here may not get you there. Think of it like this: buy and hold is the ladder that you use to climb the mountain. But once you reach the summit, which is your retirement, that same ladder may not help you get down safely. You're no longer adding to your portfolio, you're withdrawing from it. And that changes the entire risk dynamic. See, buy and hold assumes that you have time to weather downturns, time to let the market recover, time to ignore short term losses. But for retirees or those about to retire, time becomes a limited resource. You can't afford a big loss in the first few years of retirement because that's when sequence of return risk can do the most damage. A 30% market drop early in retirement isn't just a paper loss. It's money you may never get back because you're drawing income while your investments are down. And let's be honest, those drops don't always come from market fundamentals. Sometimes it's tariffs, policy shifts, or straight up political volatility that sends things tumbling. Ain't nobody got time for that, especially not when your retirement income is online. Now, here's where it gets interesting. Most advisors, and I'm talking about the majority of the industry, are still preaching buy and hold, but they're not the ones actually managing your money. They're using third-party money managers, model portfolios designed by someone at home office, or investment algorithms that are run through a wirehouse research desk. They're not designing your portfolio. They're not making real-time allocation decisions. They're not rebalancing based on economic data of your personal situation. And they're not adapting that strategy for where you are today in your retirement journey. I've seen clients come in thinking that they've had a personalized strategy only to find out that they were in the same model portfolio as hundreds of other people. No adjustments, no responsiveness, just a static plan that worked when the markets were rising. And that might work for someone in their 30s or 40s, but not someone trying to generate income in this economy. At Houston First Financial Group, we take a different approach. We don't outsource your investment decisions to someone you've never met. We don't rely on static models that get updated once a quarter. We're hands on, we're responsive, and we're constantly monitoring how your retirement plan interacts with real world market conditions. Active management to us isn't about guessing or chasing trends. It's about staying engaged. It's about staying strategic. It's about aligning your portfolio with your retirement income timeline, not someone else's theory. So, yes, buy and hold has its place. But if you're in or near retirement and you're withdrawing income from your accounts, you deserve a strategy that does more than just hope it all averages out. Because in the real world, timing matters, cash flow matters, and the right decisions at the right time can make all the difference. In the next episode, we're going to shift into a more tactical conversation. How do you structure income during a recession? What do smart retirees do differently to keep their income flowing and even when the market isn't cooperating with them? So make sure that you're subscribed or following so that you don't miss it. And if you're ready to take a look at your portfolio and what it's doing or not doing, head over to HoustonFirstFinancialGroup.com and schedule your retirement risk review. Let's take a look at your current plan and see if the ladder that got you here is still the right one to carry you forward. I'm Chris Hensley, and this was episode 3 of Retirement in Recession. See you in episode 4.